Business at this cafe is picking up, but it's been a rough few years for the owners, who are hoping for some more rate relief from the Reserve Bank.
A bit disappointed, yeah.
Everywhere now the price is going up.
Cappuccino?
The couple says they still owe the bank several $100,000, and last month's cut took some pressure off.
Our family, we can save a couple hundred, per month. It's not much, but it can help. Like we can take the whole family to have a good dinner.
But that wasn't top of mind for the RBA governor.
We're not in the business of offsetting price levels and giving people relief. We are in the business of targeting inflation and employment.
And with the RBA now more worried about inflation, the official cash rate remained at 3.6%.
We're just being a little bit cautious about that. I don't think suggests that inflation is running away, but we just need to be a little bit cautious.
This is not the outcome that millions of Australian homeowners would have wanted, but it's certainly the outcome that markets and economists were expecting.
You and your colleagues have said the economy is showing signs of an upswing. So in that kind of environment, how could you justify further interest rate cuts?
If we can observe a bit of an upswing at the same time as we're continuing to see the labour market tightness contract, then you can foresee circumstances where it might be appropriate.
Economists are divided on what will happen in the months ahead.
We don't think that they will cut in November, and we actually expect them to be on hold until, comfortably into 2026. Will, depend on the data, obviously, but we have May penciled in as the most likely candidate for the next cut from the RBA.
I think there will be a cut in November. Obviously, it will depend on what happens with that labour market data coming in a couple of weeks, also the quarterly inflation data, but certainly not 2 cuts as hoped by February. I think it's 1 cut.
The Reserve Bank says rising house prices and a surge in borrowing are signs that the existing interest rate cuts are already working, even though their full effects won't be felt for months to come.
If that means that we don't lower interest rates further, then I wouldn't say that's necessarily a bad news story.
Many borrowers are still under some form of financial stress, according to Richard Whitten from financial comparison website Finder.
In the latest survey, we've seen 35% of borrowers say they're struggling to make home loan repayments.
He also says there's a lot of competition in the mortgage market, and people can still get a better deal on their home loan if they phone up their lenders.
Rates are hovering around 5.5%. as a kind of benchmark. So if you can get a home loan with a rate below 5% or below 5.5, that starts to look quite competitive.
Here you are, sir.
Jack is now thinking about refinancing as interest rates appear to be near the bottom. For him, $1 saved is $1 earned.